Most traders lose not because their strategy is bad, but because their mindset breaks under pressure. Today, I'm showing you why mastering your psychology is the real key in trading success and how you can finally get an edge over 90% of traders. So number one, what we're really going to go over is why trading psychology matters. As I said in the beginning of this video, you can have the best strategy in the world, but if your mind cracks under pressure when it comes to fear, greed, and frustration, you will lose when it comes to trading. After all, trading is 80% mindset and 20% technicals. Think about it. Have you ever taken a trade and maybe you held it for too long because you had the fear in your mind that, oh, you know what? It'll come back. It has to come back. So think about that analogy. Or maybe you took a random trade out of frustration because of the fact that you lost the first one. Maybe you took a trade where you held this trade for longer than you should have and you let it hit stop loss. Or maybe you took a trade, you watched it go in the opposite direction as you anticipated, and you said, damn, okay, no worries, it'll come back, and it never comes back. That's why it's very key to have that mindset, right? And it's very key to have things set in place for what you're going to do if and when the trade doesn't go the way you want it to. Let's get into the three major enemies when it comes to trading. So number one is going to be fear. This could be fear of losing money on a trade. This could be fear of success, but just fear in general when you're in the markets. Number two is going to be greed. And this has to do with holding trades longer and chasing more. So as you guys have seen in most of my videos, I do aim for a 1-to-3 risk to reward ratio. Sometimes it happens, sometimes it doesn't happen. But where people get really, really greedy is, oh, it hit a 1-to-3. Okay, cool. Or it's almost at hitting my 1-to-3. But let's see if we can get it to a 1-to-4. Number three for the emotions is revenge trading. When it comes to revenge trading, it basically just goes into you basically trying to make that money back. And that is a very bad mindset to have when it comes to money, because us as traders, yes, you will lose money. You have to think of it in terms where if you put on more risk for this particular trade, is that going to be good for your account or is it going to be bad for your account? So like if I take 10 trades today, how is this going to impact my account in the future? Will I be happy with that outcome if I lose all 10 trades? Or will I be sad with that outcome? Like, how is future me going to feel in the present moment after it's done? Fear makes you miss great trades, and greed makes you stay in trades for too long. Revenge trading just makes you lose twice. So when it comes to revenge trading, because I feel like it's very, very key to unbuild bad habits. Like maybe you have a habit of revenge trading. What you're going to want to do is find a way to habit stack and unbuild it. So a book called Atomic Habits, and he talks about basically making your good habits more attractive and making your bad habits more unattractive, right? So as I said earlier, if I were to do this, how would that affect me in the future? So think of having like an anti-revenge trading journal kind of thing. So like, and you have to have those rules set in place, right? Like I only take 2 trades a day, or maybe you take 3 trades a day, XYZ, but it has to be customizable to you. I basically wrote most of the stuff down. So if you see me looking down, it's just because I'm looking at my phone. But for example, my max trades per day are, my max loss for the day is, if I hit my limit, I will. So for example, if I hit my limit of 2 trades a day, I will close my computer screen. I will go outside and do something else. Today, I trade to follow my plan, not to win fast or fix losses. And you can also have a trading checklist. I'm going to also put everything that I'm saying up on the screen so you guys can kind of follow along just in case. And that way, when you are in that predicament, you'll have a more clearer headspace and you'll be able to basically step away from the situation. Trading checklist. Did I follow my setup criteria? Is this trade event emotionally driven? Am I within my risk parameters? Is my mind clear and detached from the last trade? If this trade loses, am I okay walking away? I think the last one was very key. If this trade loses, am I okay walking away? If the answer is no, then you shouldn't enter the trade. And then journaling about it, loss protocol. Write in your journal what happened, How do I feel right now? Am I thinking clearly? Remind yourself, one controlled loss protects my account. One emotional trade destroys it. And then daily reflection, did I follow my rules? Yes, no. Did I revenge trade? Yes/no. How many emotional impulses did I resist? What did I learn? Win or loss? Am I proud of that? So I think that's key too, because us as traders, we get so keen on making sure that that trade wins when realistically you're not in control of if you win or lose. You're only in control of how much money you're risking and how much money you're actually putting on the table at said point, right? So the last part, win or lose, am I proud? Am I proud that I lost this trade, for example? So say you took a trade on SPX. So for example, this morning I took a trade on SPX for a buy. It did go up. I got a bit antsy and nervous about said trade. It went up, it started pulling back a bit, but I expected it to pull back, but not as much as it pulled back. It pulled back like 4 points. I got a bit antsy about it. And in my head, I was like, okay, I should probably just close the trade from here, cut the losses short at a minimum, which I did. But after it pulled back, it went right back up. So I was like, very nice. We love to see it. So I think it's nice to really understand what you're thinking during that time that you're in the trade and really understand how your mind processes things and why you trade the way you do, if that makes sense. So for me personally, win or loss, am I proud that I did that? No, I'm not proud, because I shouldn't let my emotions control my trading. I should let what I see control my trading as opposed to my emotions. So I see it pulling back, cool, that's fine. If it hits my stop loss, then I'm out to trade, so that's fine. I shouldn't necessarily be like, okay, it might do this, it might do that. Yeah, it might. It might hit your stop loss, but let the trade play out. I think that also comes into also trusting yourself as well. You have to be able to trust yourself and trust your setup and trust your trades. That way, when they do play out, you're like, okay, cool. I should do more of this and less of this. And as you get along with journaling and stuff, you'll start to realize, okay, cool. I did this good last time. When I take trades on Wednesdays, they're usually great. When I take trades on Tuesdays, they're usually not that good. Like, you'll get a grasp of everything as you basically go along. Number 3 of this video is going to be how to build a strong trading mindset. Number 1, and I say this all the time, please, you're going to need to have a trading plan. Knowing exactly where to enter the market and exactly where to exit is going to be what removes that emotion. So I usually will look for trades on SPX. I'll mark up exactly where I'm going to get out of the position, I'll know exactly how much I'm risking right off the bat before I even enter the trade. And I'll know exactly how much I can potentially gain before it happens. So everything's predetermined, even though it might or might not happen. And also something that's very important as well. Say you had a really, really good trading week, Monday, Tuesday, and Wednesday. What you're going to want to do, especially if you're trading a live account, which helps with the emotion as well, is to take profit off the table. Or maybe for your trades on Thursday and Friday, you size down. So I'm not risking as much money, so there's less of a chance of me losing the money that I already gained for the week. But definitely recommend, if you've had a adequate week halfway throughout the week, then definitely take some of your profit off the table. So you're no longer thinking, okay, but I still have this, I might lose that, da-da-da. So it's kind of like you start off with a clean slate. Number 2 is going to be to accept that losses are a part of the game. If anybody tells you that they have 100% win rate, they are lying to you. Like, straight up, they're lying. Nobody has a 100% accuracy rate. You will lose when it comes to trading, but successful professional traders are good at losing, and they're good at keeping their composure when they lose. With your risk to reward and win rate, you'll be able to win more trades than you lose, because that is the ultimate goal. And also the goal is just to preserve your capital as well. Number 3 is going to be to focus on execution and not money. Your goal equals good trades, not getting rich overnight. So instead of thinking it as a quick get rich scheme, think of it as, okay, cool, My goal is good trades. If and when I see a good setup, if it obtains my rules, 2 trades a day, three trades a day, whatever that might be, then I will enter a position X, Y, Z. So if this, then that, if I don't see this set up, then I won't enter the market. Like, for example, if SPX doesn't break 5,500 for a buy and come back to retest that level, I will not enter said position for a buy. And you have to be able to stick to that set of rules for yourself. Number 4, control your environment. Your environment is going to influence how you react to certain things, right? So when it comes to trading, I really and truly just like to trade and be in my own zone by myself. And then I'll go back to life and everything else after. In a quiet place, limit distractions, and take breaks. So say, for example, like this morning, what I did was I took the trade on SPX. I lost said trade because I closed early, and I waited 5 minutes before I entered my next trade. Was it hurtful to still sit there and look at the screen for 5 minutes? A little bit. But it's good to also understand that you have to take a step back to take a step forward. And it's nice to really get out of your own head. So maybe you close the computer for 5 minutes and then you come back on later. And this is going to be a bonus part for this video. If you stayed this long and watched, I appreciate you. And you're a real one. But basically, bonus tips that are going to help you with your mindset real quick. These are going to be quick mindset exercises that you can do before you trade. Obviously, it is optional, but that's entirely up to you. You could do deep breathing or meditation before you're trading. So sit in a comfortable spot, breathe in, breathe out, really just get yourself into the flow of things. Next, I think is very important is journaling your emotions after each session. So when I took the first trade, how did I feel? When I took the second trade, how did I feel? How did I feel after I was done trading? What were my emotions like during the trade? Like, how did I feel during the trade? Obviously, for me, it was a bit rocky because I was more focused on the fact that it was pulling back, even though I expected a pullback. But for you, right, focus on how did I feel during, how did I feel after, and how did I feel in between the trade? Last but not least is going to be reviewing your wins and losses with a neutral mind. So stay calm, stay steady, review your wins and losses without the emotion and the money attached. I know that's very hard to hear because the only reason we trade is because we want the outcome. We want the money. We're either going to win this trade or we're going to lose this trade or we're going to go break even on it. But I think it's key to have that set in stone because it's key to really get the emotion out of trading and only trade with logic over emotion. Because everything's always better when you have a logical term behind it. Like, even just life in general. When you're not worried about how everything's going to pan out, things usually tend to pan out very well for you. Remember, you can master the charts, but if you don't master your mind, you'll always be stuck. If this helps you, hit like, subscribe, and feel free to share this with someone who needs this reminder today. Let me know in the comments, what's been your biggest trading psychology challenge? Down below, would love to hear it. And yeah, I appreciate each and every single one of you for watching. And until next time, I'll see you guys in the next video. Peace.